Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark price for feed wheat is £173, up £2 from last week. The escalating war in the Middle East continues to have a severe impact on global logistics and input costs. Supply disruption caused Brent crude oil to push over $119 a barrel in trading on Thursday, while fertilizer prices have spiked, forcing farmers worldwide to reconsider their spring planting programs. Wheat markets are now caught between ample global stocks and localized supply-side weather risks. Over 55% of the US winter wheat crop is now facing drought conditions, with the southern plains enduring hot, dry and windy weather. After finishing last week at £174.45, the highest level since late November, the London feed wheat May contract retreated to £171.50 by Tuesday. 2 days of modest gains saw the old crop contract inch back to £173.50 at Thursday's close. More farmers are locking in prices on their 2026 feed wheat on Hectare Trading, with forward selling this week in Yorkshire and the Humber, the West Midlands and North East Scotland. The Hectare Trading Midlands benchmark price for milling wheat is £186, up £2 from last week. Analysts have cut their export forecast for EU soft wheat to destinations outside the trading bloc from 27.6 to 27.1 million tonnes, noting reduced demand in the Middle East due to the war. Meanwhile, on Hectare Trading, farmers have been forward selling 2026 Group 3 wheat in East Anglia. Since dropping to €190.25 on 17 February, the Paris milling wheat May contract has staged a slow but steady recovery, breaking above €200 at the end of February and above €210 at the end of last week. More restrained trading this week saw the contract close Thursday at €207. The Hectare Trading Midlands benchmark price for feed barley is £163, up £5 from last week. Australia experienced a surge in barley exports in January, shipping 1.42 million tonnes of barley, a 16% rise over December. Feed barley made up 902,000 tonnes of this total, two-thirds of which was destined for China. On Hectare Trading, we've seen selling of feed barley in North East Scotland for April movement at £157 a tonne, with a price offer range of £11, and malting barley for £162 a tonne for June movement in the East Midlands. The Hectare Trading Midlands benchmark price for oilseed rape is £426, down £13 from last week. Chicago's soybean futures dropped heavily on Monday after President Trump threatened to postpone his meeting with China's Xi Jinping over Beijing's perceived lack of assistance in the Strait of Hormuz, before recovering slightly when the meeting was rescheduled. Global rapeseed production is forecast to reach a historic high in the 2026-27 season, breaking 86 million tonnes on the back of record acreage across Canada, the EU and Australia, amounting to 41.9 million hectares. With such a tangle of macroeconomic and geopolitical factors influencing the global oilseed complex, Paris rapeseed has seen some pronounced swings. The May contract dropped below €500 on Monday, recovered to €503.75 on Tuesday, but had eased back to €500.75 by Thursday's close. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.